Guys, welcome back to another video. In today's video, I'm just going to talk about some of the important rules in forex trading. These rules are so fundamental if you're looking to succeed in forex trading. Many people are aware of these rules. Some people just choose not to pay attention to them, or some people are not even aware of them. So with this quick video, I'm just going to share 7 fundamental rules, 7 fundamental truths about trading forex, trading the markets, that you need to be aware of. And hopefully this is going to set you on a path to success regarding your forex trading. By the way, if you are new on this channel, please consider subscribing. That way you do not miss any of our future videos. Like the video. That's how you show me you like the kind of content that I'm putting out there, and I'll know how to if I should give you more of this type of content. So let's get into the video. By the way, if you are looking to download forex robots, indicators, books and stuff like that for free, see the links in the description box below. So the first fundamental truth, the first rule of the markets that you need to understand and you need to accept, it's important that you understand it and you accept it, is that price will ultimately move where the market makers decide it should go. And you need to accept that the market is always right. And you must accept that manipulation by market makers is just part and parcel of trading the markets. So it does not make sense for you to always blame the market. Don't be in a habit of blaming the market. Accept and understand that price will ultimately move wherever the market makers decide we are taking this price to. Whether it's based on your good technicals or your fundamentals or based on whatever else, just understand that market makers, they hold the market, and accept that there's going to be manipulation. So don't turn around and say they are manipulating, they are doing this, they are doing these tricks and stuff. Those tricks and manipulation and stuff is fundamental for the market to be what it is. So never blame the market. Accept it for what it is and understand that's how the system works. If you are going to participate in the market, that's how the system works, and basically accept that that's part of trading the markets. Fundamental rule number 2 is that technical analysis, fundamental analysis, it never works 100%. Regardless of what your mentors say, regardless of what everyone else would want you to believe, technical analysis, fundamental analysis never works 100%. Sometimes not even 80% of the time. However, you don't need to be correct 80% of the time. You don't need to be correct 100% of the time in order to succeed in forex trading. There are people who are 65% right, 60% right, 70% right, 80% right, 75% right, and they are very successful as long as they have a good risk to reward ratio. As long as your risk to reward ratio is good, you only need to be correct 7 out of 10 times, 8 out of 10 times, 6 out of 10 times, and in the long term you are a successful trader. So that's rule number 2. Fundamentals and technicals will never work 100% of the time. Rule number 3, accept and understand that money management and risk management principles actually work 100% of the time. In all market conditions, in everything that you do, trust me, if you have a good risk management plan, if you know how to manage your money in your trading account, you will and can rely on that strategy 100%. That's something that's 100% guaranteed to work in the markets. Risk management, money management, those principles, if you find a plan, principles that work for you, if you follow them through, trust me, those things work. Rule number 4: the market rewards the patient and the disciplined traders. A lot of the time, the best position, trust me, the best position to take in order to make money in trading is actually not to open any position at all. What do we mean? What we mean is you must only open a position when the odds are staked in your favor. Most people think they need to be in the markets every second of the day, every minute of the day. You don't need to be that. The market will reward people who are patient, who are disciplined, who know when to get into the market and who know when to stay on the sidelines. So a lot of the times, just not getting into the market is actually the best approach to the market. Rule number 5: 80% of forex trading success is actually based on trading psychology, fear, greed, hope, overconfidence, fear of missing out, all those emotions that result in the failure of majority traders. So if you find that the big banks are making a lot of money, the hedge funds are making a lot of money, most of the time they are actually relying on 90% of traders having the bad psychology approach to the market, being fearful, being greedy with the market, being overconfident with the market, trying to chase the market. These are all the elements that are being used against you by the guys who know how to move the markets. So if you really want to become a better trader, what you want to do is to look inside yourself first. Deal with your psychology. Deal with your psychology. Deal with fear. Deal with greed. Deal with overconfidence. Deal with the fear of missing out. When you can handle those emotions, when you deal with them, 80% of the work is done. 80% of the work is done. Now you just need to find a good strategy, something that you can rely on, something that you can follow to the letter. Number 6: around 5% a month on average, or 80% a year, is a realistic return from forex trading. Even if you are a successful trader, it's a realistic return from trading. If you are making more than 10% growth on your account, if you are making more than 20%, if you're making more than 200%, 100% return on your trading account every month, there are chances are you are taking too much risk, and once or twice you're going to lose that account. It's a reality of trading. If you want to be consistently growing your account, you just need to aim for a 5% growth a month on your account, or an 80% growth on your account per year. If you are flipping your accounts left, right and center, you can do that only for so long. And there are times where you are going to blow that account, and hopefully you have some money saved aside so that you can come back and do it again. Lastly, many people will actually never become outstanding traders in their lifetime. Many people will actually never become successful traders in their lifetime, because trading is not like playing soccer or doing dentistry or doing farming and things like that. Like we said in our first point, the market makers are always messing up with people's psychology, with people's understanding of the market, doing a lot of things. Then you add on top of that, we've got our complex algorithms that are coming into the markets each and every time, and all these things are messing up people's psychology with regards to the market. So many people end up on the roller coaster of always looking for new courses, new strategies, new systems, new indicators, new everything. They're just constantly looking for a new thing that can help them, and they will never be consistent with everything. They will never be consistent in anything, because they are always on the road looking for something, and instead of focusing on the actual trading, they are out there looking for courses, looking for mentors, looking for signals and things like that. That's a truth of the market. So, did I leave anything out that you think you want to share with other traders? Leave it in the comment section below. Like this video, subscribe. I'll see you in the next one. Bye.